Everyone, my name is Michael Valtos, and I'm a former futures trader at JP Morgan, and today I'm going to explain order flow. If you're not familiar with order flow, hopefully by the end of this presentation, you'll be familiar with it and hopefully comfortable with it and want to add it to your trading. So what you're going to learn today is how to read order flow to find better trades. You know, as a trader, you always want to be finding better trades. And you know, it's as simple and as stupid as that sounds. It's not always easy. You know, a lot of traders, one of the things they struggle with is what I call borderline trades. You know, trades that are almost there, that sort of make sense, but they just sort of take it because it looks right, but it's actually a bad trade. And with order flow, you can understand what's happening in the market a bit better. And I'm going to show you. I want to talk to you today about how to trade with the institutional order flow. You know, everyone always says, oh, if you want to make money, you got to follow what the institutions are doing. The institutions always make money, but there's a caveat to that, and I'll explain that in today's presentation. I'm going to identify how you can identify trap longs and trap shorts in the market. You know, we've all been in that position. As soon as you buy, the market sells off, or as soon as you sell, the market rallies. And I want to show you how you can identify it with the order flow, and how you can take trades with it. So. And lastly, I'll talk about how to use order flow to find hidden support and resistance. This is one of my favorite uses of order flow. You know, it gives you an insight into things that other traders just can't see because they're not looking at the volume that's being traded, what's actually trading in the market. So if you stick around to the end, I've got a special gift for you. It's a book that I wrote on order flow. It's a 150-page book. It's in PDF form, so you can just print it out and enjoy it over the weekend, and let me know if you got any questions. Now, before I get started, go through a brief disclaimer. One of the reasons why I put this out there is because I want people to understand that there is risk involved in trading. In most everything in life, there's risks. Whether it's dating, you don't know if you're going to end up with a broken heart, or in trading, you don't know if you're going to lose money. And I want you to come in, understanding that there are risks involved in trading. Trading is not for everybody. So this presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, one of the reasons why I say that out there is because I've met people that are literally like on a race against time, a race against poverty. Like, oh, I've got $10,000, and I want to start trading. If it doesn't work, I'll just go out and get a job. That's not how you should approach trading, right? It should be money you don't necessarily need to live on to survive. To put food on your table and put a roof over your head. And just a little bit about myself. I don't want to spend too much time about this, but I just want you to know where I'm coming from and why what I say, has real practical applications. I spent 8 years as at JP Morgan. I was vice president of futures trading. I spent 4 years at Cargill as the trading desk manager, both in Chicago, and I set up a trading desk in Singapore when the trading floors on the exchange closed. Prior to that, I was a licensed Eurex trader at Commerce Bank. Before that, I was with EDF Man on the global trading desk, where we literally traded everything you can imagine, from sunflower futures, sunflower seed futures, to Azuki red beans in Japan, to rubber contracts, and anything that was futures traded, we traded it. And I started my career in the 90s on the CME floor in the early 90s with Dean Witter. I was a runner. So, I went from being a runner, literally the lowest rung possible in the futures industry at the time, to, vice president of JP Morgan. And, along the way, over those 20 years, I've met a lot of people. I've learned a lot. Obviously, I was trading every day. That's what I did for my living, right? It wasn't like I was just trading, as a background to having a full-time job doing something else. No, that's what I did. I traded for a living. And in 2015, after leaving JP Morgan, I started orderflows.com. And originally I started out as a training company, right, to train traders on how to read and trade order flow. And the software that was available out there, I was using some other company's software, but I really wasn't pleased with it. I thought that I could take it a bit further for traders, because I was training traders how to read order flow a certain way, but it was I've been doing it for so long, it was second nature to me, and I realized for a lot of traders, it's going to be difficult, because they didn't have the experience, and I wanted to make it as easy as possible. So I came up with the Order Flows Trader software, which I feel takes order flow analysis, sort of to the next level. There's indicators, some of which I'll talk about in this presentation, to help you with your analysis, to make it easier to read the order flow, to understand what you're looking at. And it runs on NinjaTrader, and also there's a version for Sierra charts, but NinjaTrader is the main version that I use in the charts that I use in this presentation. So, imagine what your life would be like after you learned how to trade. Now, when I say that, what I mean by learning how to trade is learning how to understand the market. There are very few successful traders that are just purely indicator based. The only one that comes to my mind is Tom DeMark. He's developed a lot of his own indicators. But besides that, I have not met, honestly, and I've met some of the biggest traders in the world. Most of the people that appear in Futures Magazine on the back cover, I've met, at least 30% of them, and very few of them are strictly indicator based. They understand how the markets work, they understand the forces, supply and demand, and that's the basis of their trading. And that's what I want to hopefully get you to that point, is to understand how the markets move, what moves the markets, and how to trade. I mean, that's what I call trading, not just going out there and buying the latest indicator and putting it on your system, trying it for a week or two. It doesn't work, then move on to another thing. That's not trading. It's understanding the markets, what moves the markets, the buying and selling, supply and demand. That's what moves the markets. Now, I've had many successes and failures in the markets, in trading. I've had I don't want to say spectacular losses. I've had six-figure losses. I've also had nice gains, but over the years, the gains are better than the losses. Now I got this picture here, right? Because this is me. This is me with my wife and kids. This year we went to Disneyland, and if you're successful at trading, it gives you the freedom, to do what you want. And I got to that point. I retired when I was 43 years old, and I decided I want to spend more time with my family. And I knew that because I knew how to trade, it gives me that freedom to do the things that I want to do. I could stay home, I could watch my kids grow up, I could go attend their school functions. It gives me that freedom. And hopefully that's what trading, if you're successful at it, can give you also, right? It's not all about, driving fancy cars. It's about things in life that matter to you, right? And, you got to decide, what you want to do with your life. Do you want to go to work every day for, 10 hours a day, or would you rather, learn a skill that can stay with you for the rest of your life? Now, I've gained what I consider priceless knowledge after being a futures trader for over 20 years. I've seen and traded in many different market conditions, and what I put in the book and what I try to teach traders is the things that I've learned over those years. And before we get started, there's a few things I got to ask you. I feel like in a movie theater, right? They say turn off your phones. Most importantly, log off Facebook. You don't want any distractions. I just want your attention. That's all I ask for your attention. I know it's hard for some people to off Facebook. My wife is one of those people, but I don't say turn off your phone, but just put it face down, because sometimes you get distracted when a message comes over. So the first thing I want to talk about is, the first part is reading order flow to find better trades. And before I could do that, you have to ask yourself, what is order flow? Well, it's reading what is trading in the market as it trades. Now, there's a bit of an discussion, argument, I'll say argument, but some people think looking at a dome, the depth of market is order flow, while looking at a volume footprint chart is not order flow. You'll say, that's order flow. That's trades that already occurred, whereas order flow is the pure flow of orders going in. Actually, it's a bit semantics, but what really matters is what traded in the market. And the best way to describe it is someone's intention for something as opposed to someone's commitment. If someone actually puts on a trade in the market, they're committed to that market, and they're going to make a decision based on that position. If you're not in a position in the market, if you just, if the market's 5 bid at 6, and you're working sevens, you don't care if the market moves down to 4. right? Because you're not filled, you don't have a position on. But if you're, the market's 5, 6, you bought 5s, next thing you know, the market's trading 4s, that's going to affect your decision. So it's more important to react to what's actually traded in the market, I think, than what is someone's intention. There are all these, quote, algos out there that like to play the games. Spoofing is technically illegal, so I'm not going to say that it happens, but, there's some, I still believe there is a bit of shenanigans that go on. Sometimes you hear talks about people got a big position they got to do, they got to buy, so they sell a little bit to give the impression the market's going down, and they come in and they start buying. But nevertheless, that volume, what actually trades in the market shows up, and that's important as a trader. You want to know what people's commitment is to the market, and by analyzing the trades occurring in the market, when supply is coming into the market, when selling is coming in, because you can see it, or when demand is coming into the market, when there's active buying going on. And if you're looking at a normal bar chart, this is a normal bar chart, candlestick chart of the German Bund, and we have this nice high up here. This green line is the high. Look, we got a nice sell-off. Okay. Now, anytime you're at a high, a new high, you want to ask yourself, are we going higher or are we going to sell off? And you can see on this move up, we hit the high, we come off a little bit, rally back up, hit the high, then hit the high, and we got a big sell-off. These are the moves you want. You want the big moves, not the little moves, right? And order flow is going to key you in on, when the moves, when it could possibly be moving off that high. Again, by understanding when supply is coming into the market. Okay, I talk about supply because we're at a high, and there are ways that you can tell by looking at the order flow. This is this chart. This is right here on the order flow chart here. This is the volume footprint chart, and some people are scared of numbers. They see numbers and they freak out for some reason, but it's actually not as complex as it looks, right? It's just a way of organizing the data. And while it does look intimidating, there's actually 3 main things that you should understand with order flow. One is delta, which is the net difference between the buying and selling in the bar. Imbalances, which is the relationship between the bid and the offer, the volume traded on the bid against the volume traded on the corresponding offer. And if it's more than a certain percentage, then you have what's considered a market imbalance. And the bar point of control, which is the point in the bar that has the most volume. And I might get into why these are important in a minute. And all this information is available to every trader. And if you're not using it, you have to ask yourself, why aren't you using it? So this is a bond chart from yesterday, I think, or the 17th. And you see we sold off, we hit the low, and we rallied up to new highs. What, as a trader, anytime you're making new lows, you want to ask, is this low going to hold? 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 Okay, are we going to start to rally? And if you're looking at a bar chart, it's hard to figure that out, honestly, because you don't know what's trading. You don't know if demand is coming into the market, or you don't know if there's still a lot of supply coming into the market. But if you look at an order flow chart, it's as clear as day sometimes. Is every example as beautiful as this? No, but these are examples that appear practically every day in the markets. All the markets follow order flow, and sometimes it's very clear like this. So you have this market selling off, and then you see the rally here. Okay, now again, I talked about a couple of things: delta, imbalances, and bar point of control. So the delta runs along the bottom, and it's the difference between the net aggressive sellers and net aggressive buyers. So on a market moving lower, you should have generally negative delta, means you have more selling. It's pretty simple, right? Imbalances in the bar is there's selling imbalances, there's buying imbalances. If it's a red number in the bar, it's selling imbalance. So you can see on this move down, right? You see red, red, red in these bars, red numbers. On the move up, you see blue, right? Because you have aggressive buying coming in, right? That's what moves the markets. Is aggressive buying moves the markets higher, aggressive selling moves the markets lower. And the best way to describe it, aggressive buying and aggressive selling is, imagine you are trying to sell your house, okay? Your house is worth $250,000 and you want to sell it for $250,000, $250,000. But someone comes along wants to buy it at 200,000. So the value is 250, but the guy wants to get a deal. He wants to pay 200. So you got to decide, do you want to sell it at $200,000 or do you want to stick to your price? If you want to stick to your price at 250,000, but the buyer, is at 200,000, no one's going to trade. Your house is going to sit unsold. It's if you want to be aggressive, you say, I want to go down, I want to sell it. I need the money for whatever reason. I want to sell it, and you go down, you hit his bid, you hit it, you sell it to him at 200,000. You are an aggressive seller. Now, if the buyer, he came in thinking he wants to pay it for 200,000, buy it for 200,000, and you don't want to move the price. You say, no, it's 250,000, take it or leave it. The buyer has to decide, is he going to be aggressive or not? And if he pays your price, he buys it for 250,000, he's being the aggressive buyer, okay? And that same concept is applied to the markets with aggressive buying and aggressive selling. And the last part of these three things is bar point of control, and it's the level in the bar that has the most volume. With an order flow chart, it has a square, what do you call it, or a rectangle around it, so and it's important because I'm going to talk about support and resistance a bit later. It's important to see where the volume is appearing in the bars, because it can be very, very revealing. Now, one of the tools, like I was saying earlier, when I created order flows trader software, I want to create tools for traders to use to analyze the order flow a lot easier. And one of the tools I created was called the Delta Scalper. And what it does is it reads the delta, right, the number down here, the difference between net aggressive buying and net aggressive selling, to help highlight to the trader when the market is moving from a supply-driven market to a demand-driven market, or a demand-driven market to a supply-driven market. And you can see here, right, when the market's moving down, the supply is it's a supply-driven market because you have more supply than demand. Then when a market moves up, it moves up on demand, right? And you can see it here on the low of the day. It's giving you the signal here. That's this blue area here, telling you, hey, you know what? This market is exhibiting signs of going from a supply-driven market to a demand-driven market. Okay, and then you can look at it and say, yeah, we're at the low. It's not about picking lows. It's not about picking highs. Rather, it's about letting the market tell you, based on the information it's giving you, that, hey, we could be seeing a shift in supply and demand coming in here. And lo and behold, you got a nice rally from the lows up to new highs. So which chart do you think has more useful information? The candlestick chart like this, or an order flow chart? I hope you'll say order flow chart. I mean, there's just so much information on here that you don't even have to look at all of it to use it all. I mean, I said if you just focus on these three things, delta, imbalances, bar point of control, that'll put you ahead of everybody that's just looking at plain bar charts or candlestick charts, right? Everyone talks about having an edge in the market, and order flow, I strongly feel, gives you an edge, gives a trader an edge in the market. And I'm not going to say will give you an edge, because you have to know how to use it, right? There's so many nowadays. There's so many people coming out with footprint charts or order flow charts, but it's kind of useless unless you understand what you're looking at. That's why you need to sort of align yourself with someone to help bring you along, right? I mean, you could, there's people that literally charge thousands for software, but they don't give you proper training, don't teach you how to use it. It's kind of a waste of money. So the next thing I want to talk about is trading with institutional money. Everyone says follow the big money. To me, the way I think of it is, the shark, the big whale, rather, it's a whale shark actually, in the water, and all the little fish following it, all the little traders following the big whale. But how do you know if you're following the big money? Honestly, it's easier said than done. You need tools to determine what the big money, quote unquote, is doing in the market. And with order flow, you have two natural tools. You have market imbalances and delta, right? Remember I explained what a market imbalance was, is when you have um, more aggressive buyers and sellers, right? Now, in the old days, lazy brokers, when the markets would go up and you'd ask them, why is the market going up? They would say, well, there's more buyers than sellers, which is, completely misunderstanding the market. You'd never have more buyers than sellers in the market. What you have is more aggressive buyers and sellers in the market on a market moving up, or on a market moving down, you have more aggressive sellers than buyers, aggressive buyers on the move down. And take it a step further. If you know there is aggressive buying going on, what would that be worth to you? And if you knew there's aggressive buying going on at a certain point, at say a low, what would that be worth to you? That, to me, that's very valuable information. Just step back to this chart here on the bonds for a second. You're at your low of the day, but if you're looking at the order flow chart, you don't see the aggressive selling that you saw on this move down. Instead, you see aggressive buying coming in. You see the market imbalances. That's a clue to you that, hey, this market could start to move higher rather than keep going down, right? That's very valuable information, as a trader, that you can use and take advantage of. Now, you have to understand, right? There's different types of traders in the market. There are passive traders. These are the traders that work limits. They let the market come to them. Aggressive traders buy at the market. They hit the bids, sell into the bids, or lift the offers, buy the offers. And again, going back to the house for sale example, right? If you're trying to sell your house at $250,000, but I want to buy it at $200,000, I'm the passive buyer because I'm working a $200,000 bid. You are working a $250,000 offer, so you're a passive seller at $250,000. I'm a passive buyer at $200,000. If the buyer pays, if the buyer pays $250,000, he goes up to the offer price. He's being the aggressive buyer. If the seller moves down to $200,000 to get the house sold, he's being the aggressive seller. And once you understand that, it really makes understanding the markets a lot easier. And putting it in perspective, passive buying near lows is a sign of price support. If you have a lot of people bidding, at a low, at or near the low, that's a sign of support. If you have a lot of people offering supply, at a high level, that's a sign of resistance, price resistance. Now, aggressive buying near lows is a sign of a shift from supply-driven market to a demand-driven market. And what that means is, the market had been selling off, but you're hanging around your low. You have aggressive buyers coming in saying, "Hey, this is a good opportunity, good buying opportunity." They start lifting the offers. They're being aggressive, and the market generally will move higher. Just as the market, if a market rallies, starts hanging around, hits the high, starts hanging around the high, but then you have a lot of people coming in and say, "Hey, you know what? This is a good selling opportunity. Let's start selling." They start hitting all the bids. Market starts trickling down a little bit. That's a sign of aggressive selling, and that will help move the market down. It's the aggressive actions of traders that actually move the markets up or down in the short term. And so aggressive buying appears in the form of buying imbalances. Aggressive selling appears in the form of selling imbalances. And I have these highlighted blue and red because aggressive buying is generally highlighted on the order flow chart in blue, and aggressive selling is highlighted in red. And I'll show you perfect examples. Market moving down on the aggressive selling, where these arrows are. See all the red numbers, right, as the market's moving down. This area up here, you have the delta scalper giving you a sign that, hey, this market is potentially shifting from demand to a supply-driven market. When you have a delta scalper giving you a sell signal, it's telling you that there's more supply coming in. Then you see it followed up with the aggressive selling. There's more supply coming in. This is in the crude oil. This is this morning, actually, 2 in the morning Chicago time, 3 in the morning. You're making new lows. Look at all these red. Look at all the aggressive selling coming in. As you're taking out the lows, again, you should be asking yourself, are we going lower or are we going to bounce and go higher? But if you see, all you see is aggressive selling going on, chances are we're probably going to go a bit lower, right? You can see the deltas also all red, right? It's not till you get down here that you start seeing some signs of buying coming in with the, the positive deltas. Now here's a market that's moving up, positive deltas, right? That's what you like to see in the market, because you have net aggressive buying going on, net aggressive buying of the offers, then selling into the bids. You see the imbalances, the aggressive buyers coming in. Here you have a stacked buying imbalance, which is 3 or more buying imbalances stacked on each other. This is a stacked buying imbalance. A stacked selling imbalance would be 3 or more selling imbalances stacked on each other. And it's actually quite a decent signal. I know some people have whole trading systems built around stacked imbalances. And again, getting back to the bond chart from earlier, aggressive selling on the way down with the selling imbalances, negative delta, sign, again, another sign of net aggressive selling. You hit your low. What do you got? You got positive delta, so it's net aggressive buying coming in, and you see imbalances, buying imbalances this time, boom, 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 as the market goes higher. Again, the delta scalper did give you a sign that, hey, this can be shifting here from supply-driven market to a demand-driven market. Identifying trap longs and shorts in the market. This is the third part that I want to discuss today. And honestly, we've all been in this position. We've all been trapped. And the best way I could describe it is like this fish. Don't be the fish. As fish, he thinks he's jumping, get to the next level, and all he does is just jump into the bear's mouth, and he's done for it. And we've all been in that position. And what it is as soon as you buy, the market sells off, or as soon as you sell, the market rallies. Literally, like as soon as you click buy, the market sells off. How many ticks, or as soon as you click sell, the market rallies. It's unfortunate. If you've never been in there, consider yourself lucky. But if you're looking at a normal bar chart like this, can you honestly say that I think there's trap traders up here? I don't think you can, right? Because to understand what trap traders are, and again, it's a term that a lot of people throw around, but you got to understand the whole concept of it, right? It's all these people that are buying on the high that are trapped. You need some sort of clue, and the order flow gives you that clue by looking at the volume, right? Because you can see, just really quick, okay, here you got 1,300, 2,400 people, lots trading on the high. Notice on these bars, do you see any sort of volume like that? No, you don't on the move up. And it's there. My software will draw a red arrow if it's trapped buyers, or a green arrow if it's trapped sellers. So again, if you're looking at a bar chart like this, can you honestly say, I think there's trapped traders down here, trapped sellers, people selling it and are caught wrong. But if you're looking at a volume footprint chart, you can see it. You can see it pretty clearly, and my software, I've developed a feature that detects trap buyers and trap sellers, and it's hard-coded into the program. And you can see here, I don't know if you can see that, it's actually a green arrow here on this low. The red arrow here, you can see it's a bit easier to see. And again, it signifies areas, and trap buyers, trap sellers are good short-term trading opportunities. Again, it's not a long-term thing where you could rally from the high, or sorry, rally from the low up to the high. For me, I like it for the next few bars. This one, it did the market rally a little bit, then went sideways, and then it got the rally. But on this one, this is a 10 range S&P. It sold off. This day, it was this was on Monday. It was kind of a tight range in the S&Ps. We went from 58 down to 51. I think that was pretty much the whole range. It was a 7-point range, but still, it's giving you an opportunity for a few points. Over the next couple bars, traded lower. That's what you really want with it. Again, the whole concept of trap traders is, the thought process that as soon as when people are trapped in a position, it's like, again, as soon as you bought, you got to start thinking, if you're a short-term trader, where you're going to get out. And if as soon as you buy, and the market goes against you, you got to start thinking of getting out quickly. You're trapped in a position that's not working out, and it's happened very fast. So that's what the phrase trap traders that everyone talks about, and how to use it in trading. With order flow, you can see it. But with a normal bar chart, it's it's impossible to see. So it's giving you more opportunities. Order flow gives you more opportunities to read what's happening in the market. Now this last part here is part 4, and it's about using order flow to find hidden support and resistance. And this is something that is actually a important topic because for one, I think people don't understand support and resistance. Honestly, as bad as it sounds, and again, I'm not trying to sound like I'm the world's greatest trader, but generally how people draw support and resistance is they just look at a couple areas. Okay, well, I can draw a line here, so this must be support. This must be support. We hit this price level here twice. That must be resistance. But it's sort of a lazy way of defining support and resistance. And again, I'm not making this stuff up. If you go to, if you look it up, right, you can see here, support levels are where demand is perceived to be strong enough to prevent price from falling further, while resistance levels are prices where selling is thought to be strong enough to prevent prices from rising higher. Again, this is the chart, right? Resistance, support. So if you break it down a little bit, okay, resistance is the point where selling pressure is more than the buying pressure, or you can say supply is greater than the demand, right? You're saying supply is greater than the demand. And support is the point where buying pressure is more than the selling pressure. You can say demand is greater than supply. But this is the problem that I have with this is, again, some people will say, well, it's not that important, but it is, because it can be, you don't know if it's price rejection or if it's price defense. If it's price defense, it's support or resistance. If it's price rejection, what it's telling you is, you don't have the strong buying per se. It's what you have instead is prices being rejected. And there's a big difference. And if you've ever traded big size, right, one of the things that you always want to do is you want to hide your intentions to the market. Right? If you've got, when I say big size, right, if you're trying to trade, move hundreds or even thousands of contracts, you're going to do it slowly. You're going to try and piece it in, and you're going to look for areas, right? You don't necessarily going to be looking for areas of price, where you have a lot of buying going on, to fix it in, because you're going to find areas where there's just no interest, right? And it's going to be price rejection. So if you're trying to piece it in, it's going to show up in the order flow. I'm probably not explaining this properly. It's a little bit more complex, but how can you tell support and resistance? Well, if you look at volume traded, right, big traders equal big volume, okay, period, and it shows up in the order flow. And support, this is it. It was going back to bars, point of controls. The area in the bar that has the most volume. And when you get these bars, right, when you get bars and you got heavy volume, towards the bottom of the bar, especially on the low of the day, it's usually a very good sign of price support. I mean, look at this volume down here, 138, 128 in the bottom two levels. Do you have any sort of volume like that here? No, you don't. Again, down here, what do you got? You've got, 61, 63, 90, 31. Normally, you're just getting, 20s, a little bit here, 13. Even here, you got some hidden support coming in here, 400 lots, 438 lots, 449. Again, you can see how this market is holding. And, that's where the point of control is very important in trading, because oftentimes it's going to highlight to you to take a look at that level to tell you, hey, let's investigate this further. And if you're not picking this stuff up, you're missing out on information. If you've ever wondered why sometimes bars trade down to a certain level, it's because you have support or resistance there based on the bar point of control. Here again, this is support. What do you got? Look at the volume. You got trading down here on this, 217, 198, 124, even here 208, 177. This bar is only traded 1,400 contracts, and you're getting 70% of the volume on the bottom three price levels. So there's strong, strong buying going on down here. That's giving you the support. And that's why sometimes, I get a little perturbed, when I see just people just drawing arbitrary lines. Like, to me, this is just drawing arbitrary lines like this. If this was really a support level, it should test it. It should come right down here. That's me and the way I've learned how to trade. But whatever. It's resistance. The market rallying up from the low up to this high area. And what do you got? You look at the volume traded up here: 107, 139, 56, 47. But then not a lot of volume underneath it. At the top of any of these bars, do you see volume like that? No, you don't, right? And that's important information that you can only get out of looking at order flow, by seeing where, these points of controls are appearing. Now, if it appears in the middle of the bar, then that's normal, right? That's where you expect it to appear. But when it appears on the extreme, that's the market telling you something, and, understanding it. And just sort of going back here, excuse me, again, like you can see this bar here, right? This bar where it says 12.17, you can see the volume here. The point of control is at this level. You got 449, 438, 540 here. Where does this bar pull back to? It pulls right back towards this point of control, because the market knows, the astute traders know that there's heavy buying there, so they know there's support. And what happens is, you got 8 lots traded. Now, people are realizing, hey, we're coming back down to that level. Maybe these buyers are still there, and then the market goes up. It doesn't start trading around, hanging around here. No, it's they know that there's support here, and it's hidden inside inside the bar. So that's the beauty of it. And if what traders sometimes get lost on is they treat all prices being equal, right? When you're trading on a bar chart like this, you treat all prices being equal. Whether it traded one contract here and 1,000 here, it doesn't matter. They treat it equal, and it's not. I mean, you could see, by looking at the volume, even here, right, you can see that there's heavy volume. None of these bars have this type of volume at the bottom of the bar to indicate that there's strong support there. And if you can understand that, then it's going to put you, I think, further ahead of the rest of the traders out there. And if you're not using order flow, that's where you're going to suffer a little bit in your trading. And people wonder why support and resistance works some of the times and fails some of the times, is because they're not looking at really what makes up support and resistance, right? And it's the volume. So you got to look at the volume. All right, so in the past 40 minutes, hopefully you'll agree with me that you think it's time well spent so far, but due to time constraints, I'm not going to be able to cover everything you need to learn about order flow in a 45-minute webinar. Honestly, I know that because I created a course on order flow, and I thought it would take a certain amount of time, and ended up taking twice as much time. I thought I could create a course that would take 6 hours and ended up being 15 hours. But I want to give you a special offer so you can learn much more, right? Because really the whole reason why I do these presentations is because I really want to help people. And it's gotten to the point where sometimes I try to do too much, and people start calling me a vendor rather than a trader. And it does rub me the wrong way. But really, I know I've helped traders out there, and that's what keeps me going. Is I really have people's best interests at heart. And sometimes people want to learn more than others. So not every trader is going to be the same. But let me ask you, do you want in? Do you want in at this point? And hopefully you're going to say yes. Yes, I want in. So I've got a special offer, okay? And I'm going to get into it here. Now, the software that you saw, generating the charts in this presentation is what I call the order flows trader. And normally I sell it for $899, okay? And like I said, I created a trading course. It's a 15-hour trading course. It's 20 lessons. And I sell that at $297. And the Delta Scalper Indicator, which you saw on a lot of these charts here, it's normally $299. You add that up, normally that's $1,495, And honestly, you can go to my website, you can buy it right now for $1,250, okay? And people do, right? People do that regularly. And order flow is perfect for traders that are new to the market, right? Because I really feel that as a beginning trader, you should learn how to trade, period. And reading the order flow will help you become a better trader. And experienced traders, as well, it helps. I work with a lot of experienced traders that have been around the markets for a long time. And they want to perfect their entries. I mean, you can't perfect your entries, but rather you can refine your entries, get better entries, better exits. If you could save a tick on each trade, in the end, at the end of the year, it's going to be good for you. So you have two choices, right? You can keep doing what you're doing now, trying to learn how to trade on your own. Watch my videos. I got a YouTube channel, right? I got almost 200 videos on it on order flow. And find yourself a year later still struggling with order flow or still struggling in trading, or you can make a change. It's an investment in yourself. I think that's the best type of investment you could make, is in yourself. Things that no matter what happens, you can't take it away from you because you already learned it. And get the materials to magnify your chance of success in the markets. So again, you get the order flows trader software, the trading course, the Delta Scalper indicator, you get all that, right, in this special deal that I'm going to put together. So hopefully by now you should see why it's such a good deal at $1,250 on the website. But I got a special deal for you. I got throwing some extra stuff in. Got the Delta candles, right? Delta candles, take the Delta and put it into a visual form. Most traders are familiar with candlesticks. And it takes the Delta and puts it in candlestick form, because there are patterns in the candlesticks, even within Delta, that are very revealing to a trader. And this bonus is for the first 5 people. Normally I sell this for $250 separately. And that brings the whole value of the package right up to $1,745. Now, again, if you don't trust me, go to my YouTube channel, go to my Facebook page. You can see comments that people are writing. It says, this one trader, you're willing to help a stranger like myself to make my dreams a reality to become a profitable trader. Mike, no one out there offers the learnings you do and the know-how of the business. And these are unsolicited. These people just posted this stuff, to my comment section on my videos. And again, you get started now for $12.50. Okay, go to orderflows.com. Oh, thanks, Renee. I see you saw it there. And you can see it, but again, you got to make a decision. Do you want to do nothing and just trade the same way you always have been, or do you want to make an investment in yourself and start your transformation? And I got a really special bonus. I went back and forth with this because it's not something that I offer ever before. For the first 3 people, I'm going to offer personal one-on-one training. 3 sessions, 1 hour each, done over Skype, and it's answer all your questions. I'll explain whatever you want regarding the order flow. And this is a picture of myself fishing. I like this picture because I want to teach you how to fish, right? That's the whole goal of it. And this offer, this bonus, I said, is only time I've ever made it. But again, I want people to get to that point where they're able to trade by themselves and understand the markets and become a trader, basically. But it's only for the first 3 people. But it's 3 hours worth of training. And again, I charge a lot. I very rarely do one-on-one training anymore. But when I do, it's not cheap. People say, hey, can you do one-on-one trading? And I put a high price on it because it's time. It's my time as well. And it's for serious people that really want to learn to trade. So again, you can get started. It's just $12.50. You get all that. You get all the training. You get the personal one-on-one. So you got to ask yourself, is it worth taking your time to check it out? To take on new perspective and new success. So when you add all that up, it's over $3,500. But again, it's only for $1,250. So if you don't take action, you're just going to keep struggling in your trading. You keep trying to understand what's happening in the market. Most importantly, you're going to keep losing money. That's the worst thing, is the money that you lose trying to figure it out on your own in the markets. So if you're interested in my book, you just email me, Mike at Order Flows, with the subject line, send me your book. I put a link in the chat. Again, this is a picture of myself with my family. This is last Halloween. It's coming up on Halloween. I thought I'd put it in there. But I just want you to see, what trading can do for you. It can give you the freedom to have more time with your family, whatever interests you in your life. Maybe you want to travel. Trading can open up those doors. If you're good at it and you're successful, it's going to give you that security in your life. And that's what I want to give to you, basically.